topic. Number three, no political discussions whatsoever. Also, keep side conversations to a bare minimum so that the rest of us can focus on the education and information that Roger is sharing, because after all, folks, he's here to give us an edge and to help us all become more confident and consistent in our trading. Now, this morning at 8 o'clock, Roger had his pre-market open show, and he shared with us a bunch of information, starting with what his small cap watch list was. And I'm going to go ahead and copy and paste this into the chat panel so that we all have that information in the event that you were not aware of it. Now, there were 4 small caps that he picked today, and I'm just looking at them on my chart. I have 3 screens here, and on my screen here off to my left, I can see that none of these have approached that level where there's a potential for a breakout, and we're about 2 hours or an hour and a half or so into the session. So nothing to see there. I also want to share with you that when Roger makes these selections, his key selection criteria is not only price action, but extreme volume. I mean, massive volume has to be present for him to consider a small cap stock for trading. Also, remember, these small caps are not dependent on what drives the broader market. The reason that is that it's driven by individual retailers like ourselves. Institutional money is not in small caps. And always remember that when we're looking at these pre-market setups, okay, you only want to trade these during normal market hours. And if you don't see an entry by 2 p.m. Eastern time, forget about it. It's not worth the risk of getting into it. And under no circumstances should you ever hold one of these small caps overnight. Now, looking at the catalysts for today, and we all know what the catalysts are, right? This is information that's either known or will be known during the trading session, but is not yet priced in the market. On the Fed side, we know that we have Jerome Powell speaking and PMI data coming out. As far as sectors are concerned, keep an eye on chips and consumer staples. And 2 specific stocks came to mind. AutoZone, which was going to have earnings come out before the market open. And we also saw that Boeing was up about 2% coming into the open. Now, Roger also likes to share with us what his pre-market stock watch list is. And I'm also going to share that here with you. Let me go ahead and copy and paste this into the chat panel. And all right, so we have some information. Now, what was interesting about today is that Roger spent a fair amount of time before he shared with us his market watch list as to what he means when he says a stock is overextended. And when we were looking at the shorts, okay, SBAC, he made 2 comments there. He said, number one, that stock was not overextended, which means it wasn't, it wasn't poking through the 1.5 deviation that he likes to draw on the chart, and the fact that it was an A line. So SBAC on the short list kind of stood out for him. On the long list, we saw that UNH, HCA, and let me see, both of those were A lines and they were not overextended. So where you see the double asterisks, those are A line stocks that we're setting up. Where you see a single asterisk, like under BK, Hood, Zeta, CVS, that meant that these were good looking stocks and they were not overextended. So once again, for those of you that were there to see that discussion about what Roger means when he says overextended, and that he shared his watch list and showed us which ones were overextended, that was a great session. Lastly, Roger shared his market thoughts with us, and essentially he says, hey, I'm concerned. Roger's quote, I'm very concerned about the markets. Why? He doesn't like the fact that the VIX is slightly up after the market made all-time highs yesterday. He doesn't like the fact that the bonds are moving lower. He doesn't like the fact, he doesn't like what he sees in the put to call ratio. He doesn't like that the SPY is overextended and the RSP is just kind of moving sideways. He doesn't like the fact that the MATs are way overextended and the QQQ key is not. Now, Roger's not forecasting and say, look, guys, I'm Chicken Little and the sky is falling. All he is saying is that the technicals seem to point to the fact that we may have a correction coming, and that might be a very good and healthy thing given how toppy things are. Essentially, a handful of stocks are driving the markets, and there's nothing else really technically going on that supports that, and particularly when you see what the bond market is doing. So once again, very, very interesting, that analysis from Roger. Now, once again, for those of you that are coming in today, we got a great group of people here. Roger's got a very, very nice agenda that he's put together, continuing focus on day trading. And today he's going to tell us, when to use the vold, okay, and when to ignore the vold, because there are times when the vold is just somewhat random, but there are times when it's important to take a look at it. He's going to share with us how to use the tick to identify solo candles, all right? He's going to share with us the pros and cons of the trading the different assets or the different ways that you can trade the S&P 500. He's also going to share with us how day trading indexes is very different than day trading small and large cap stocks. And as a bonus, he's going to give us an introduction into how he establishes his trading levels. A lot of you are fascinated by Roger's levels, how accurate they are, and he's going to share with us how he, or give us at least an introduction into how he establishes those levels. And then he's going to dip into the mailbag. There's a couple of things that he'd like to quickly address. Number one, he's promised to show how he uses Stock Fetcher for A-line scans. That's just a continuation of a lot of questions that came up from last Thursday's session. And he promised to tell us a story about IBM around an opening gap. So those are some things that he'll dip into the mailbag if he's got time for that. Now, folks, if you've got questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, guys, remember that the chat is open to everyone, and we do have some ground rules. Number one, always be kind. Number two, keep to the topic. Number three, no political discussions whatsoever. Number four, please try to keep your side conversations to a minimum so that the rest of us can focus on the education and information that Roger is sharing. Because after all, folks, he's here to give us an edge and to help us all become much more confident and consistent in our trading activities. And with that, folks, it's the top of the hour. It's a great time to say hello to Roger and a great time to say hello to Matt. Guys, how you doing? Midday on a Tuesday. Things going well for everyone?
Yeah, actually, let me just put my camera on there. Yes, they are going great, actually. They're going very good. I got my second t-shirt from Carlos.
I saw that.
Yeah, Day Trading Emotions. The roller coaster right there. You could see it. It's actually a pretty cool t-shirt. My wife loves these t-shirts that he got. Let me say hello to everybody on YouTube. We got Richard, Kevin, Dave, RP. We got Deanna, Steve, and let's see who we got here. That's great, Paul. That's good information. Brendan, Mike, Bugs. Good morning, everybody. Stefan, Ivano, Ken, Stanley, Annie, Andrew, Pink Sparkle, Sony, Tim, Ted, Tinia, Vic, Paul, Cyrus, Stan, Ted. She did. It was Carlos. Carlos got me the t-shirts, not my wife. I don't know where he got them, but they're funny. He got me three. I wore one yesterday, one today, and I'm gonna wear one tomorrow. Art, Sylvia, Jeremiah, Ken, Wesley, Mark, Marlo, excuse me, Cyrus, iPhone, Christopher. Yeah, he should, right? Carla, hello there. Good to see you. Nicholas, John, iPad. Good morning, or good afternoon. Jeez Louise, it's afternoon, everybody. How's everybody doing today? I hope everybody's doing fantastic. Did anybody make a little money this morning in the hood trade that I gave? I gave a hood trade in the pit today. Want to make sure you guys took a little bit. We were in it very, very quick, but I still like the trade as a swing.
Yeah. Well, it's interesting, Roger. I was doing
Yes,
a little
sir.
bit of a wrap up on your presentation, and I wanted to say, look, Roger's not saying the sky is falling, but there's some things that bug him about the current market condition because, I mean, really, it's disjointed when you think about a handful of stocks that are driving everything. But if you look at the bonds, if you go ahead and look at the QQQE, the RSP, things of that nature, there doesn't seem to be broad level support. And once again, you're not saying, look, guys, run for the hills, stock up your bunkers. It's just that a correction appears that it might be on the horizon, and that might be a healthy, good thing.
Love it. I'm just posting a few of these here. That's exactly true. Now, let me give the room just a few more minutes and we'll kind of get into. I have a lot to speak about today. I have like a
Oh, your
lot.
agenda is awesome.
My agenda is yeah, I have a good agenda today. So I'm going to start off. Now, folks, so a few things, okay? Let me some housekeeping things. And if you guys are missing today's session, you guys are really missing out big because we're going to have a lot of things today on the agenda. So first things first. Matt gave the code for Thinkorswim, this line right here for Thinkorswim. He gave them to customer service. They said they were going to put it in the A-line members area. They were having some issues with the link or whatnot. I don't know what the problem is. Don't ask. I have nothing to do with it. But it should be making its way out there for Thinkorswim. So if you have A-line, this will be in the members area for you, okay? If you have that's Thinkorswim. If you have TC2000, you could just email me and I'll send it to you. Okay, you don't have to go. You can bypass everybody. Just email me because they're not familiar with it. They're not really familiar with it. They're not familiar with TC2000, so it's kind of like my own thing. I use it for my own. So anyway, that's kind of what's going on with that. So that's number one. Number two, I wanted to make sure that everybody, and I did not explain it clearly. I thought I explained it really, really clearly, but I'm just going to say this again, just for sake of. Okay, let me put this here. I'm just reviewing really, really quick something. Okay, here we go. Okay, this is the sheet from yesterday. I just wanted to make sure that everybody understands what we did here. Because I explained it yesterday and I only got one question from the same guy that was asking me the whole day. And I kept explaining it to him, but I'm assuming everybody else got it. So I'm just going to go through it again. And if you don't understand it, please post it here. So what we did was, and I wanted you guys to see, we did not use leverage, and I'll show you that right now. What we did was, remember, most people here don't trade the SPY. They trade the option on the SPY. Just like people in the pit, they don't trade the underlying. They trade the option on the underlying. 99%. There's always crazy people like me who buy 10,000 shares, but that's a whole different story. So I wanted to show you this, okay? So what Matt did was he went through entries and exits on the SPY as we post them in the members area. Then he just started them right here, and he gave you the gains with this right here. Then what he did, so to show you the equity curve, to show you the profit, the loss, how much he would have made, all that without any leverage. This is just dollar. This is just on the. So I'll show you how. So he went and we got in 37.37 SPY points. We took our profits, our losses, everything together. We netted 37.37 points on the SPY. Okay. So if you trade SPY with one share, you're going to make $37.37. Obviously, you're not going to do that. That's not what you're going to do. So what we did was we converted that into E-mini points because remember I told you could trade E-minis or you could trade the options, whichever you did it. But this is more apples to apples. This is like exact. Now, notice something interesting. We didn't grease this in any way. Matt, let me ask you a question. Why did you do 37.37? You just rounded it up instead of rounding it down. Is that it? Right here?
What now?
You took 37.37 and you made it into 358. I'm just curious why it wasn't 357. I'm just curious. Because of the half point on the E-mini?
Well, it's because the ES and the SPY aren't exactly correlated.
Fair enough. Okay, so Matt fudged by 1/3.
Well, it's not fudging.
I know. I'm just trying to be. I'm trying to be mathematically untouchable here, Matt. You understand?
Yeah,
I don't want someone say, he used leverage. This is 37.37 and this is 358. I got you there. So that we did none of that. Okay. So right here, you could see that all he did was, and for anybody that doesn't understand this, SPY 1 point is 10 points on the E-mini or the micro, just for anybody that doesn't understand. So all he did here, he didn't change this, he didn't gear it, he didn't put a 5-time gear, nothing like that. All he did was convert this into E-minis, okay? That's all he did.
Again, it's not even converted. There's if you look at the sheet, there's fills for the SPY
Right.
and there's fills for the ES
Well,
on each trade.
but we stopped. On your sheet.
On this sheet right here.
Okay, sorry, because I thought you were just going on. Okay. This is even better because I thought you were just going off of the what you're sending people, but you're actually doing here off of the actual. So yeah, this is not.
Yeah,
So
that's ES entry.
I stand corrected. I just assumed he transposed this. He wasn't even transposing it. This is actually the numbers here. Now, this does not. Well, it's right. It's right here. Peter, the dates are right here. Matt, your microphone is very low, according to Peter.
Okay, that should be better.
Yeah, now I could hear you. Yeah. So one step at a time. So this is from April 1st. We could see how it did from any time frame, but let's start here. So Matt actually didn't. I thought you just converted this,
Nope.
but you didn't even convert it. You did it even much better. You actually looked at okay, beautiful. That's great. So now, what Matt did here, now this is the part where we have a couple of people who are just clueless. They just don't want to accept this. So he didn't do one E-mini. He didn't do one SPY point for 10 E-minis or 20 E-minis. He did one SPY for one E-mini. And it was never raised. It was never adjusted. It was never modified to 2. In other words, there was no bet sizing here on the SPY or the E-mini. It's just a flat conversion. You understand? And yeah, it is better the way you did it. I thought you converted it, but you're right. The E-mini's right in front of my face. So you didn't even convert it. This is just what it happened to be, which is even better. Fair enough. I'm wrong. I love being wrong because if I'm wrong, that means that's good. Okay. So this is one contract. Okay. One contract. So if you this is the amount of money, if you take this and multiply it by 5, which is the point on the pointage on the E-mini, or 50 on the other one, you simply get this or this. Kate, do you not see it right here? F and G. This is what you're talking about right here. Okay, good. I just want to make sure it's like we're only talking about this. So all Matt did was take the damn SPY, convert it into he didn't even convert it. He actually used the actual numbers, which just happened to be exactly the same as they should. Multiplied it by 5. That's all he did. There was no leverage here. There was no leverage. Nobody used like 10 E-minis. And this was not done to show you how much money could be made with one E-mini. This was just done to show you the numbers, to show you the results. Okay? So now, do you guys understand exactly the math? There was no leverage here. Just because it's an E-mini, it's not leveraged if you're just using one E-mini instead, and you're not calculating it from the margin perspective. So do you guys understand this? I want to make sure you guys understand this. Okay. All right. Okay. Now let's answer the second question, Matt. How have we been doing since July 1st? July, August, September. Oh, we're not in September. Yeah. How have we been doing since July 1st?
Hold on, I'll run the numbers.
And by the way, everything I explained to you right now is exactly what I explained yesterday. The only part I mistook is I thought Matt transposed, but he actually kept track and wrote them down, which is even better. All right. Tell us, Matt. I'm curious too. Or you could just tell us where this started on or you could just delete anything beforehand. I don't care how you do it.
Yeah, I'm just trying not to mess up my original sheet.
Mm-hmm. You go, boy. You do it the way you want to do it. And from the looks of the feedback, which I've gotten a total of 4 from here, it didn't look like anybody had any confusion on this at all. I'm somewhat new this. What is E-mini and E-micro? E-mini is $50 a point, and micro is $5 a point. That's why right here, this is 1790 and this is 17,900. Okay. All right. Yeah. All right. Gotcha. How are we doing, Matt?
We are. You want the equity curve?
Yeah, why not? You could do both. You could do the equity curve, whatever floats your boat. I don't know why somebody specifically wanted it from. I bet you they joined right around July 1st. Let's see who asked. Sean. I bet Sean joined right around July 1st. Let's see. Remember, this is only 4 months, folks, right here. Oh, thank you, discount price experts, but 10.125. That's funny.
We're at a 60% win rate with a 1.24 profit factor.
That wasn't the question. Can you show me the equity curve?
Yeah. Well, I haven't done that yet.
Okay. Yeah, I just want to know where the equity curve, so I could see how it looks and I could see how many points was made. And folks, keep in mind, we've been in the crappiest market cycle, which has a lot to do with this. We need energy and we need rotation. Oh, no problem, Marky Mark. No problem.
We start with 1,000. Let's start with 2,000. We start with 2,000. We end with 5,000.
Say that again.
If we start with 2,000, we end with 5,000.
Start with 2,000, you end with 5,000. Can you do the graph here and can you do it in points? Or it's too much of a pain in the ass.
Well, I mean, like equity curve.
You started with 2,000, you ended with 4,000.
We start with 2,000 on July 1st. We end with 4,000.
Okay, fair enough. That's good. So you would have doubled your money.
Right.
Okay, I can live with that.
So,
all right.
Excuse me. We end with 5,000.
Excuse me. So we start with 2,000, we end with 5,000.
Yeah, we had a high watermark of 6,100. We're currently at 5,400.
Can we see any of this stuff? But
yeah, I had to make it fun.
Okay, so I'll tell you what. I'll go through some of my shtick, and meanwhile you make it, and then you show it to us. Okay?
Yeah.
Is that okay?
Yeah, that's fine. I mean, it's
okay.
not gonna take me that long.
All right. Right. That's pretty funny.
It's done.
Where? Done where? I don't.
Let me share my screen.
Oh, I'm sharing my screen. Let me let you share your screen. Sorry, folks. This is live. This is not like pre-recorded or anything. But I want to see the data. Where's my here? Stop screen share. Cyrus, you've been saying the markets have been fake now for 5 years, 6 years. If they're always fake, then they're real. Then fake is real, right, Cyrus? Cyrus, I don't understand this. I don't understand what you mean by fake. So that's the equity curve.
Yeah.
So, there I see it right there. From 2,000 to 7,000 and ended at 5,000.
5,400, 53.
That's pretty good.
Yeah,
that's pretty good.
I mean, look, there's no doubt in the last month it's been pretty choppy.
Yeah, of course.
But we're not losing money.
Not at all.
It's just not going up as much as we'd like to.
I'll take 2,000 to 5,000 over 2 months, like any day and twice on Sunday, and I'll like beg for more. No, that's great. Thank you for doing that, by the way. I appreciate it. So you did even better than I expected you to. I thought you just added a zero to the e-mini. You actually calculated every one of
I
them.
track every
See,
single.
this is
E-mini
why
trade.
this is why he's my analyst. He doesn't miss anything. I love it. I love it. So it literally is just like using the SPY, but just it's literally like using the e-mini as a direct proxy. So, and I want you guys to know something. We didn't we didn't try to leverage, and we didn't try to leverage as we continued the exercise. It
Yeah,
was
there's
always
no scaling. This is
there's
one
no scaling
contract
here
the entire time.
Yeah. There's no scaling here. Less than 10 minutes hood, kept 20 more, kept, on the other hand, I exited, lost, kept the option expires. Thanks for the trade, man. You win and learning from. You're welcome. You're welcome, Beatrice. You're welcome. That was a bonus trade, by the way, the GNRC trade. Yeah. Trump does speaking. Is he done speaking? Is Trump done speaking?
Yeah, I mean, he finished his first round. I don't know if he's going again.
He likes to talk sometimes. Okay, let me pull up TC 2000. The first thing I want to do is I'm going to show you guys how to draw levels. I wanted the room to fill up. Let's see here. Great results for under 3 months. Not great results, like really good results when you consider the market we've been in. Like really good results. More importantly, look at the equity curve. The equity curve isn't like this. You know, it's steady. I'm going to tell you what the problem is. And unfortunately, I've seen it many, many times. Here's the problem. I'm going to tell you what the problem is. Did you just say, Shannon, that's what you were just seeing with one contract per trade? But let me explain something to you. And this is what the problem is. And this all goes back to what I've been trying to teach you. Let me just get TC 2000 here. This is what people do. People, they get into a trade, they make money, they get happy. Then they have a couple of losers. Then they don't trust it anymore, and then they start gauging it. They start, okay, I think I know better. I'm gonna skip this one. I'm gonna do that one, and then they are like, wait a minute, what happened here? It must be Roger's fault. But we keep track of all these numbers. You know, they're on the Telegram channel. That's the beautiful part here. And I welcome anybody to do a forensic accounting on them. Please, I mean, I would actually like you to do it. I would prefer you do it, because then if there's a problem, we can find it. But here we are. Okay.
I will say one more thing.
Please, you can say two more things.
Due to the nature of flat betting this system, even if you have a 90% win rate, your equity curve, as you go further away, is going to start to droop down, because when you have $5,000 and it's moving $50 a point, it's a lot lower of a percentage versus when you have 2,000.
Yeah, that's right.
So anyway, I slice this, it's going to have that droop.
Yeah. Now, folks, I'm going to show you something right now. And this is a good example. This was what I was showing you yesterday. This is the equity curve, right? Penny, I think you were asking the difference between this and this morning. You were asking me why the difference? Because right here, the market was not as bad, and we were able to use wider stops.
Yeah.
We haven't been able to use wide stops lately because the market's been really, really non-directional. Okay. You got to trade what the market gives you. You can't trade what you want the market to give you. You got to trade what the market gives you. And in this case, the market starts trending again. You think I'm going to be using tight stops on these things? Of course not.
Yeah, that's the other thing. The win rate it's gone down as in more recent times because of how tight the stops are. When the stops are lower or wider, the win rate goes up. But we might have to try a trade 2 to 3 times before we finally catch the trend. So even if we make, 2 points or $2, 20 points on the trade, on the last trade, we still had a 33% win rate. to make the 2 points.
Marky Mark, I don't really understand your question. You're asking me about the markets haven't been trending? Here, let me show you. That takes like a second to. Here, buddy. Does that look like a strong trend to you? Look at the market. Here we make a lot of money. Here we don't make a lot of money. Take a look at this equity curve. Does it remind you of anything, guys? What do you think? What's the market been doing for the last 3 months? Can anybody answer this question? Really, Marky Mark? Folks, what's the market been doing for the last 3 months? Marky Mark, look at RSP. Look at RSP. What has the market been doing the last 3 months? Nothing. Well, here, let me show you. On May 1st, we were at, on the RSP, we were at 180.60. We're now at 189. And then the low here is 186. This is not really big. Despite what you're missing is you're not looking at, here's what you're missing, Marky Mark. You're missing everything I've been talking about for the last 6 months, every day, 2 hours a day. That's what you're missing. You're missing the fact that you're looking at the SPY, as you know it, is this. That's what you've been looking at. This is the broad market right here. So my question to you is this. How does this look? This, you see this right here, this move? How does that look compared to our equity curve? Do you guys notice any similarities? So Penny, when the market starts trending again, when the market consolidates, and I don't mind this. I mean, Matt's doing great here. Look at this. These are nice swings. It's actually moving higher. I mean, it's fine. But I just want you guys to see. This is not, and Marky Mark, if you think this is a trend, then I got a bridge to sell you, my friend. This is crap. This is crap. I think everybody agree with this is crap. You're welcome. You're welcome. And again, folks, I'm not trying to be disrespectful. I'm trying to get you guys to understand. You can only take what the market gives you. You can't make anything more out of it. You understand? You can't squeeze water out of stone. Okay. All right. So I'm going to teach you guys something right now. So what do we cover? We covered how we calculate the equity curve. And from what I've seen, it didn't seem like anybody really had any questions or comments or any major, oh my God. Yeah, I had one guy who just didn't want to understand it for some reason. And I think everybody now understands it. Okay. All right. So I'm going to teach you guys something. I'm going to actually teach you something. I'm excited about this. Get a piece of paper and a pen out. So, where's my other, where's that thing? That. Where's that? Matt, where's that little thing here? I want to erase for the right side. I want to use it for the right side. Can you tell me where it is? I'm losing my mind here.
What thing?
This thing right here for this side. Oh, there it is. I'm an idiot. Okay. All right. All right. Okay. There we go. So what you're looking at right now is the SPY. Okay. Okay. So let's go to yesterday's session. What we want to do is we want to start at the previous end of the previous session. Okay. So the end of the previous session would be right here. And previously before that, it would be right here. So let's just start right here, September 22nd, and pretend we're going into September 23rd, which is today, okay? So let me show you guys how to draw levels, okay? Write this down. overnight low, overnight high. Okay, we got that, right? The 5-day point of control, which happens to be at, where is this sucker? 662.63. Hold on, let me put that there. 662. 662.63. You all have this, by the way, on your money flow platform dashboard. 662.63. There we go. Perfect. Look at, and look, nice level too. Then, so 5-day point of control. Yes, Jason, but not right now. I will, but not right now. Over the course of the next 90 minutes, I will several times, but just not at this moment. But in case you want to know where to find it, it's right here on your dashboard. See the red thing right here? It's right there. It's always there. You don't have to put it there. It's there if you have Trading Zone Live. Okay. So now here's where things get interesting, okay? You will need to do this because your eyes are not as good as mine. Switch to 15 minutes, okay? You'll thank me for it later. When you switch to 15 minutes, it'll be much easier for you to see support and resistance areas. I don't need it because I've been doing this for 31 years. I'm pretty good at it, I've been told. But trust me, switch to 15 minutes or half an hour and mark up the double tops and double bottoms from on a 15 or 30-minute chart, like I'm doing right here. Okay? Again, I've been doing this for a long time. I don't need to switch. You guys need to switch. Okay? So, double tops, double bottoms. Pre-market high, pre-market low, 5-day point of control, 30-minute or 15-minute, depending on how you like to do it. Double tops, double bottoms. So far, are we in the... my point of control is at 662.63. Matt, is this a 5-day point of control or 2-day point of control?
5-day.
5-day. That's what I thought. Yeah. Are you yeah. Then we're slightly off. How far are we off? We're off. So I'm at 660. Yeah, we're not in the same ballpark. RAD, we're not. You and I are not in the same ballpark. Okay. Can I program the Pro Trader dashboard to do it? Yeah, I could, but I don't want to. I told you guys I'm not going to explain anything right now except teaching you how to do this. All the explanations will come forth with later. First, you learn how to do it, then I give you the parts. And you really don't know what it is. You don't need to know really what it is because you get it right here when you buy Trading Zone Live or Alpha Zone Pro. So it's right there. The number's right there, 62.63. All right, enough of this. I'm going to close the chat now. Chat is closed. So now we go back to 5-minute charts and we look for 5-minute stairs, upstairs and downstairs. Right here we have a 5-minute stair. Right here we have a 5-minute stair. Right here we have a 5-minute stair. And right there we have a 5-minute stair. Maybe right here too. Okay, those are right here. Those are your levels. Those are your levels. Okay? Those are your levels. So, what we just learned is if the SPY breaks this level right here, we have a nice big fat gap here. It's a very tradable area right here. I mean, you could add one more here. Right there, but still, it's a very tradable area. It's a very, very tradable area. Okay? So, how did I do this and what are the ingredients? Okay, so let me open the chat again just to make sure you guys are getting this. So first, I want to make sure you write down all the ingredients, and then we will go through each and every one of them and I'll explain them to you. So stair steps is when you have a big trend and it peaks out. Like right here, that's a peak out. Okay? That's a peak out. That's a peak out right here. Those are 5-minute stair steps. You could see those on a 5-minute chart. So you start with the overnight high, you start overnight low, the 5-day point of control, and anybody cares what the 5-day point of control is? After I'll go through all that right now, Judith. The 5-day point of control is where the most volume occurred over the last 5 days. The 5-day point of control is where the most volume occurred over the last 5 days. Don't you guys want to know what price was paid the most, either to buy or sell in the last 5 days, and whether it's above or below the current price?
Mm-hmm.
I think that's very important. So the point of control right now, we're above the point of control right now. Just to show you an example, this is the SPY right now, and that's the upper area, and that's the lower range. We're outside of the current range, and we're out of balance right now. So once we come here, we will be more in balance, more balanced right here, and that's the 5-day. That's the 5-day point of 5 day. This is the highest price that traders paid or bought in the last 5 days. We're above that right now. Yes, it is, Sylvia. It has to be from overextended hours, because how else would you get overnight prices if they're not from overextended prices? The market looks like it may want to bottom out around here, although I'm pretty confident over the next day or two, this right here, this is a daily chart. We're going to come right back here. Come right back here. Okay, let's continue. So, back up. Overnight high, overnight low. 5-day point of control, the highest volume price over the last 5 days. Then you will need to switch to 15-minute or 30 minutes, and you will start seeing double tops and double bottoms. Double tops and double bottoms, very important. They'll be easy to see once you switch to 30 minutes. 30 minutes or half an hour, or 15 minutes. It's just much easier to see. Okay. Then once you've done that, you go back to 5 minutes and you do your run-ups and run-downs. Run-ups and run-downs, okay? That's it. Wasn't that a piece of cake? You want to try it on the QQQ? Does anybody want me to try it on the QQQ? Let's see. Let's see. Don't all say it at once. Please do. Yes, thank you. All right, let's do it. QQQ. Let's go ahead and where the hell is that thing again? Sneaky, this thing over here. It's very sneaky. Erase all. All right, let's erase all. Yeah, I'm going to do another example for you. Okay, so we're going to start right here on 22nd, right? We're going to start right here. Right here, we're going to start. High, market low. And now let's go back to 5 minutes. Do the run-ups. Do the run-ups right here. Looks pretty good. And that's about it right there. Do you recommend to make an alerts for these levels? No, I don't. What I recommend you do is start color coding them. Ah, you see, didn't think about that one. Start color coding them. Oh, and point of control on the QQQ. I forgot about that one. Hold on. QQQ 5 day. I'm just going right here to 591.39, 599, 591, 591.30. Ta-da! This is where the most volume has hit in the last this is where the
Last 5
most
days?
volume has hit in the last 5 days, right here. Okay. So very, 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 very. So what I would do is I would just change colors on them. Uh, that's all I would do. That's the only thing I would do is I would, like, in other words, I would keep my highs and lows one color. I would keep my point of control red. So that way, when you see the lines, you know exactly where they are. Okay.
So Roger, a quick question that came up was this.
Yes.
Is this something that we need to redraw on a daily basis?
Well, it depends. Depends how much they've moved, but typically, yes.
Okay.
Typically, I redraw them on a daily basis unless I'm really lazy, or price hasn't really changed much, or I just did them the night, like before I came on the air or something like that.
Okay.
So, but mostly, yes. My suggestion is to redo this every day. Okay. Okay. So again, and the level of importance for each of these is in the order that I gave you. I should have said that too, right?
Mm-hmm.
So, in other words,
overnight high, overnight low, importance level number 1.
Point of control
number 2. By the way, on the point of control, you were plotting that on a daily chart?
That's a 5-minute chart.
5-minute chart for the point of control? Okay.
Yeah.
Then you have the double tops and double bottoms. Very interesting. That's a visual thing that you do when you connect those.
Yeah, but you want to do those
on a 15-minute?
Or, well, preferably 30-minute. I don't seem to have, I mean, I could probably set it up here. But I could, 15 or 30-minute is the...
They're easier to see that way. Yep.
Yeah. Much easier to see. For most people, is much easier to see. Can I have them written down? I'm literally doing a video that's recorded and put in the area members with demonstrations for you, Michael, and you want me to do it right? You want me to write it down? Can you imagine people actually want me to write down this stuff? Yeah, Michael, I already wrote it down for you. Let me just fix it and make it pretty, okay? How did I know people were going to ask me to write it down, Raleigh? How did I know?
Because...
See, Michael, you were expecting me to say something nasty, but I already had it ready for you. Pre-market high and low.
Everybody's looking for shortcuts.
Everybody, but that's okay. That's okay. People like path of least resistance.
Can we program it automatically? Can it do it automatically every day? Can these are all...
How about you use your eyes and you do it manually? Raleigh, I try so hard to make people happy, and it's like the more I try, it's it just
I'm surprised nobody asked us whether we could just use ChatGPT.
I don't use Fibonacci's. I don't use Fibonacci's. Now, Christopher, let me ask you a question. Fibonacci's are like 66%, 33%. Do you think a real number that's been tested twice with price has more veracity than just a binary number? What do you think? Yeah, why don't we just ask 10% or 20%? Logically speaking, notice the levels I'm using. Pre-market high, pre-market low. These are numbers that actually mean something. For example, why couldn't the price go higher? There was aggressive sellers there. That's an important price. No, Jason, I've never won. I know 30 institutional traders. I've never once seen anybody use Fibonacci. I'm giving you levels that were challenged within the last 24 hours. You're giving me levels that have nothing to do with price action. So what, logically speaking, if you had to put money on it, what do you think would work better? Do you think it would be actual price levels that we're looking at that just occurred, that bounced hard, or just some levels that just somebody decided to throw? Come on, you know the answer to that question. You guys know the answer to that question. Rick says Sylvia's question, just guessing, but I think it comes from the fact that it seems overnight high lows were selected based on price action. During the cash session, are we seeing time series on bottom of the chart correctly? All of this overnight. Real Fibonacci trading. Yes, real Fibonacci trading costs at least $10,000, and everybody who I've talked to, except Jeff Turnmeyer, has not been able to utilize it successfully. I've talked about this hundreds of times. If you think spending $10,000 on a course is going to make you a professional trader, 85% of becoming a professional trader is in your head, between 6 inches between your ears. The rest is in an edge. I try to teach you both. Paying your way into it is not going to help. There's no correlation between how much something costs and the effect of it when it comes to trading. And unfortunately, I think painfully, most of the people here would tell you that based on their own experience. I mean, based on the feedback I've gotten from people, it's like I've spent hundreds of thousands of dollars and I've learned from you for free things that I've never even imagined before. So that's the feedback I've gotten. So, you know, if you want to spend money, but I just showed you something for free that works really good, really, really well. All right. So pre-market high and low, point of control, 5-day, using 5-minute charts, 30-minute support and resistance, or 15-minute support and resistance, and 5-minute ladders, aka 5-minute run-ups and run-downs. Everything applies to the upside and downside ladders.
So on the ladders, Roger, and once again, I appreciate the questions. How many steps need to be there to constitute a ladder? I mean, I know
you want to see you want to see something like you want to see a move and a top out, like a peak out,
or something.
Yeah,
like that.
yeah. Basically, you don't want to see chop. You want to see price resist like this, something like that. Like
you want a ladder, not a step stool.
Exactly. You want to see a nice little latte. Yeah, there you go. I mean, think about this. Look at this price level right here. Okay, just forget about everything you know. Look at this price level right here. It tries once, twice, 3 times to break this level, and then it breaks this level and then takes it down another level.
But it did hold then his support there also.
Yeah, right.
Down. Yeah.
You can't get that. I mean, if you could get that close with Fibonacci, don't you think I would be using it? I have it right here. I've tried it. It's worthless compared to my stuff. That's why I don't use it. If it was worthwhile, then I'd be using it every morning, you see? Let me ask you guys a question. Do you think I just come here and I'm like, I know I know better than anybody else? And no. Do you know how much trial and error all this stuff took? How many years and years and years? I'm just not showing you all the hard part, but like this stuff took me years to figure out. Okay. All right. Let's continue. Moon cycles, Elliott. Yes, exactly. Bugs. There. Now we're talking. All that crap. All right. Let me just check something real quick here. Oh, good. People are making more money on that hood trade. I like that. Okay. So that's the levels. Now I want to show you something else. I wanted to show you something. A lot of folks were asking me, I'm gonna switch. One second. I'm gonna go back to my. Let me go to my. Hey Matt, that divergence we were seeing is finally starting to come into play.
Yeah.
Are you in a position right now?
I am not.
Okay. Is Trump still talking?
No.
Okay, cool. Okay. So I want to talk a little bit about market internals and price action. And Powell is speaking. Of course he is. Actually, Powell speaking and being in a financial stock is not the worst thing in the world. They tend to move up. So let me give you a link to this. It would help if I gave you a link to this, wouldn't it? Okay, everybody understands? Real simple instructions, nothing fancy here. Here's the link, here's that, and here's this. All right, there you go. All right. So you guys should have this. Okay. I misspelled ladders. Hold on. I'm an idiot. Okay. Ladders. There you go. You guys should have that. And let me give it to people. Matt, can you give it to people on YouTube? I'm not.
Yep.
Okay. Thank you. Please give that to folks on YouTube. Thank you for being here on YouTube. And thank you for being here. Look at that. We got 600. We got almost. We got a lot of people here. That's what we got. We got almost 700 people here today. So I want to make this worthwhile. So let me continue. So folks, now I want to talk about, and this is going to be a very important, I wasn't even going to talk about this, but I'm going to talk about this because I want to make sure you guys are not getting screwed with these small cap stocks. Everything I'm talking about today, right now, here's what I'm going to talk about. For the next few minutes, I'm going to talk about the difference in the market structure between indexes, large caps, and small caps, and how the folks who are trading them all the same way are going to get into very, very big trouble. Okay, so I want to explain this to you, and I'll kind of touch on how to trade those small caps too. But this is mostly about a trading zone. But I want to touch on this, okay? And actually, I need to remind people. Okay. Just wanted to let folks know that Hood is moving up. This is a good time to get out with a profit. We got in right here this morning, by the way. Okay. So there's something that a lot of you don't seem to understand, and I want to explain this to you so you really, really understand this. When we talk about small caps versus large caps versus institutions versus indexes, we're talking about apples and oranges. If we weren't talking about apples and oranges, I wouldn't have to create a separate platform, Pro Trader Dashboard versus AlphaZone Pro. One compares the SPY to stocks, and one just analyzes and just trades the SPY. Okay, so very, 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 very important. Okay. Now, when you guys are seeing stocks like this, I want to just show you something. When you're seeing us in the morning with stocks like this, GTO, for example, or SLE, I want to explain something to you. These stocks are not driven by institutions. They are not driven by institutions. They're driven by retail traders like you. Institutions don't give a rat's you-know-what about trading these stocks. They can't trade these stocks. They're too small. And they're not interested in it. They'll get fired if it goes against them. Their investors will run for the hills. They're too speculative, okay? So the only people to trade this is day traders, guys like us, okay? Retail traders, not options traders, not index traders, and not institutions. So when institutions want to buy something, they don't buy it at one shot. Remember, we talked about parent-child orders, separating the orders, putting them into pieces, always buying near the bid. Remember Quick Strike, the class, full-time trading class, Quick Strike? We talked about all of this many times. They're buying at the bid. So there's always an order to buy so in other words, they cause it to go up, it comes back down, they pop it back up. Just like a balloon. Imagine there's a balloon. And you know those balloons that are always floating? And every time they come down, there's a huge wall of hands that are just going, pum. That's institutions. That's how institutions trade. So when you have a stock like Microsoft, you might or may not have noticed that it doesn't go from $40 to $100 back to $40 in 5 minutes. Have any of you noticed that yet? Okay. Small caps don't have institutional accumulation. They don't have those hands at the bottom holding anything up. So when they're done being bought, they just fall on their ass. Okay? So again, the difference between trading these small caps and trading the large caps is large caps like Microsoft, Nvidia, Google, they don't fluctuate 30, 40% a day because they have institutional volume. There's always the other side of a trade to take off. There's always liquidity, you understand? Just like a beach ball, exactly. But these don't have those hands. There's nobody there. You bought 1,000 shares, you're done, you're out. So if somebody stops buying them, they just go boom. That's why they can go from $1 to $50 back to $1 in a day. Now, does everybody understand what I just said? The concept, the difference between the large caps and the small caps? If you understand, just say yes, and I'll move on. Yes, yeah. Okay, great, perfect. So now you understand why trading them the same way it doesn't work, because you're not trading apples to apples. You're trading a volleyball versus like a little micro, those little balls that pinball. There's no yeah, there's no support for them. Exactly. So the way you trade these small caps, you can't go to the bathroom. You can't just let them ride. You can't let them develop. You can't trade them overnight. You can't hold them forever. It doesn't work that way. You will get hurt if you do, because they don't have the liquidity of a large cap stock. Okay? All right. So the way you trade this is you have to be extremely defensive when you trade this. Now, when I trade the pit, I'm not defensive at all, because I know the 8-day EMA is there and there's a bunch of support and there's a bunch of institutional volume there. That's not the case here. So the only way so now you understand the difference between them. Okay? Tomorrow, I will explain more of how to trade defensively and how to use trailing stops and the best trailing stops to use for these stocks. Okay? Now, no, not minute by minute, Jeremiah. Second by second. Second by second. Not minute by minute, second by second. Okay? Now, indexes. Indexes are on the complete opposite end of the coin. Remember when I said that institutions, large caps institutions? Well, indexes have an overabundance of liquidity. Therefore, they move the least. So small caps, large caps, indexes, they have the most liquidity. They have the most, there's virtually unlimited amount of hands. They don't even move down that much. They just kind of do this. So small caps, large caps, indexes, liquidity decides how an asset trades. Liquidity. Amount of liquidity, the type of liquidity. Did you guys understand what I just said? And by the way, thank you, Matt, for let me give you my watch list to the downside and the upside right now, and then I'm going to get into another trading zone class. I believe today's the last day that we are doing it. I'm not 100% sure, but I believe it is. So I wanted you guys to understand this. So now let me give you, only focus here. I don't care how they look here. Short side first. TAP, SPGI, VRTX, FI, and ALC. Okay, I'm going to go over them one more time, okay? Let me just check how Hood is doing real quick. I want to make sure my folks are taken care of. Oh, good. Even more profits for you all. Good. TAP, SPGI, BRTX, FI, ALC. Now let's do the long side, okay? Notice when I do the long side, if the stock is overextended or not. For example, PTSG, right? This is overextended. If it's not touching this green thing, it's not overextended. So just FYI. Nice trend here. PSTG, Rocket Labs. Whew, look at that baby go. Rocket Labs. Still not touching that area. CLS. I really like this stock a lot. I may want to swing this or give it to Matt for a swing trading program. TPR. Still not touching it. Almost there, but not yet. JP Morgan. Come on down, JP Morgan. Joby. This one is now overextended. Richard, if you're in this one, I would start thinking of profit. I know Richard was in the stock. I would start thinking profit. UNH. That looks like a nice A line. Hey, that's an A line right there. David, I've answered that question already like 10 times today. Just watch the replay, or maybe Raleigh can answer it for you. Hood. I can talk about Hood again now since we're not technically in it again. Oh, and it's still moving up. Look at that. JP, I already gave JP Morgan, APA, and CCJ. Those are my long ones. I'll do it again. PSTG, CLS, Joby, this is overextended. UNH, nice A line right there. Hood, almost overextended, almost there. I would, folks, if you bought this from the PID this morning, I would take profit on this stock. I mean, you got about $1.10 right here in the last 2 hours. It's pretty good. APA and CCJ. BKR, let's check it. BKR, not anymore. Overdone. It was good this morning. If you're still in it, that's okay. But if you're don't get into this now. Folks, look what the market is doing right now. Look what the market's doing right now. Remember what I said? Well, actually, I didn't just say it. Here's what I said this morning. I made a statement this morning. Here was my statement. This is my latest Picasso drawing, okay? I gave you this at 10:07 in the morning, 10:07 in the morning, 3 hours ago. Do you see this? That was 3 hours ago. Now we look like this. Look how we look now. So this is how we looked 3 hours ago. This is how we look now. The night is still young. X marks the spot. Oh, I would never take a trade there to the short side. I'm just saying. So folks, we're making our way there. Okay, now folks, yesterday, and thank you, Matt, again for yesterday. I did a class on Trading Zone Live, which is our premium day trading program, and as you could see by the numbers, we've been doing really well, like really well, in a good time and bad time. And as soon as the markets start trending again, it will start really going crazy. But even without it, as you saw, what was the numbers from July, Matt?
We had a
from 2000 to 5 or something like that.
60% win rate, 1.23 profit factor, but we had a from 2000 to 5350.
Pretty good. I like doubling money every couple of months. Pretty good in this kind of a market. Folks, here's the key. We're going to be doing a lot of examples, and I'm going to teach you a lot about the market internals, which I didn't have a chance to teach you. We're not done yet. I'm still going to do a lot of explanations about day trading right now. My suggestion,